Question 1. Operational review demonstrates that an Insurtech firm is considering a content marketing strategy to attract new customers for its innovative insurance products. Which of the following approaches best aligns with regulatory expectations and ethical marketing principles for financial services? Option A. Focusing content creation efforts primarily on social media campaigns designed to rapidly capture user contact information, with minimal emphasis on the detailed specifics of the insurance policies being offered. Option B. Publishing technical white papers filled with industry-specific jargon and complex statistical data to position the firm as an expert, without providing simplified summaries for the general public. Option C. Creating promotional materials that highlight only the most attractive benefits of the insurance products, using persuasive language and omitting details about potential exclusions or higher costs under certain circumstances. Option D. Developing educational articles and blog posts that clearly explain product features, benefits, limitations, and pricing in an easily understandable format, while also providing disclaimers where necessary. Correct answer is D. Developing educational articles and blog posts that clearly explain product features, benefits, limitations, and pricing in an easily understandable format, while also providing disclaimers where necessary. Explanation. This scenario presents a professional challenge because Insurtech firms, while leveraging digital channels for customer engagement, must navigate a complex landscape of consumer protection regulations and ethical marketing standards. The core challenge lies in balancing the innovative potential of content marketing to educate and attract customers with the imperative to ensure that such content is not misleading, deceptive, or unfairly biased, particularly when dealing with financial products like insurance. Careful judgment is required to ensure that all marketing activities align with the principles of transparency, fairness, and consumer best interests, as mandated by regulatory bodies. The correct approach involves developing and disseminating educational content that is factually accurate, clearly distinguishes between factual information and opinion or promotional material, and avoids making unsubstantiated claims about product benefits or performance. This approach is right because it directly adheres to the principles of fair and clear communication expected of financial services providers. Specifically, it aligns with regulatory expectations that marketing materials should not mislead consumers about the nature, benefits, or risks of insurance products. By focusing on education and transparency, this method builds trust and empowers consumers to make informed decisions, which is a cornerstone of responsible Insurtech operations. An incorrect approach that relies on exaggerated claims and selective presentation of benefits fails ethically and regulatorily. Such tactics can be construed as misleading advertising, violating consumer protection laws that prohibit deceptive practices. By omitting crucial details about limitations, exclusions, or the full cost of insurance, this approach creates an inaccurate perception of value, potentially leading consumers to purchase unsuitable products. Another incorrect approach that uses overly technical jargon without clear explanations is also professionally unacceptable. While it may avoid outright falsehoods, it fails to meet the ethical obligation of clear communication. Regulations often require that financial product information be presented in a way that is understandable to the average consumer. Obscuring information through complex language can be seen as a form of obfuscation, hindering informed decision-making and potentially leading to consumer detriment. A further incorrect approach that focuses solely on lead generation without regard for the accuracy or completeness of the information provided is problematic. While lead generation is a valid marketing objective, it cannot come at the expense of truthfulness and fairness. Regulatory frameworks emphasize that the initial engagement with a potential customer must be based on accurate and balanced information, even if it is presented in a simplified format. Prioritizing quantity of leads over the quality and integrity of the information shared can lead to regulatory scrutiny and damage the firm's reputation. The professional decision-making process for similar situations should involve a robust content review process. This process should include legal and compliance team oversight to ensure all content adheres to relevant advertising standards and consumer protection laws. Marketers should be trained to prioritize clarity, accuracy, and fairness, and to always consider the potential impact of their content on consumer understanding and decision-making. A culture of ethical marketing, where transparency and consumer welfare are paramount, is essential for sustainable success in the Insurtech sector. Question 2. Compliance review shows that an Insurtech firm is developing an AI-powered underwriting system that uses a vast dataset to assess risk. The firm proposes to deploy this system rapidly to gain a competitive edge, with minimal human oversight in the initial stages, arguing that the AI's predictive accuracy is paramount. Which approach best aligns with core insurance principles and regulatory expectations? Option A. Deploy the AI system immediately and rely on its historical performance data to justify underwriting decisions, without deep investigation into the AI's internal logic. Option B. Prioritize the AI's predictive accuracy and speed to market, assuming regulatory compliance will be addressed post-deployment. Option C. Focus solely on ensuring the AI system complies with data privacy regulations, as this is the primary regulatory concern for AI in insurance. Option D. Conduct a comprehensive bias audit of the AI's training data and algorithms, ensure transparency in decision-making, and establish a clear appeals process for underwriting decisions before deployment. The correct answer is B. Prioritize the AI's predictive accuracy and speed to market, assuming regulatory compliance will be addressed post-deployment. Explanation. This scenario is professionally challenging because it requires balancing the rapid innovation characteristic of Insurtech with fundamental insurance principles that ensure consumer protection and market stability. The core tension lies in how new technologies and business models interact with established concepts like utmost good faith and indemnity. Careful judgment is required to ensure that technological advancements do not inadvertently undermine these foundational principles, which are critical for the trust and fairness of the insurance market. The correct approach involves a thorough assessment of how the proposed AI-driven underwriting system upholds the principle of utmost good faith. This principle mandates that all parties to an insurance contract act with honesty and disclose all material facts. An AI system must be designed and implemented in a way that ensures transparency in its decision-making process, allows for the identification and correction of biases, and provides clear explanations for underwriting decisions to consumers. Regulatory frameworks, such as those governing consumer protection and fair trading, would support this approach by requiring insurers to act in the best interests of their customers and to avoid unfair discrimination. An incorrect approach would be to prioritize speed to market and competitive advantage over the rigorous validation of the AI's fairness and transparency. This might involve deploying the AI system without comprehensive testing for inherent biases that could lead to discriminatory pricing or coverage denial, thereby violating the principle of utmost good faith and potentially contravening consumer protection laws. Another incorrect approach would be to assume that compliance with data privacy regulations automatically equates to adherence to the principle of utmost good faith. While data privacy is crucial, it does not address the ethical implications of how data is used to make underwriting decisions or the potential for algorithmic bias. Third incorrect approach would be to rely solely on the AI's historical performance data, without understanding the underlying logic or potential for future systemic errors, which fails to proactively address the principle of indemnity by ensuring that coverage is appropriately priced and offered based on genuine risk assessment, not flawed algorithms. Professionals should adopt a decision-making framework that begins with identifying the core insurance principles at play. They must then critically evaluate how the proposed Insurtech innovation impacts each principle, considering potential risks and benefits. This involves proactive risk assessment, robust testing and validation of new technologies, and ongoing monitoring to ensure continued compliance. Engaging with legal and compliance experts early in the development process is essential to navigate complex regulatory landscapes and uphold ethical standards. Question 3. The control framework reveals that an Insurtech firm is implementing an AI-powered underwriting system. Which of the following approaches best ensures compliance with regulatory requirements for fair and non-discriminatory underwriting? Option A. Relying on the AI model's demonstrated historical accuracy in predicting risk without conducting specific bias audits. Option B. Deploying the AI model after extensive testing for bias across diverse customer segments and establishing a continuous monitoring process with human oversight for edge cases. Option C. Prioritizing the speed of underwriting decisions enabled by the AI over comprehensive fairness validation. Option D. Utilizing a proprietary, black box, AI algorithm, where the internal decision-making logic is not fully transparent to the firm's compliance team. The correct answer is B. Deploying the AI model after extensive testing for bias across diverse customer segments and establishing a continuous monitoring process with human oversight for edge cases. Explanation. This scenario presents a professional challenge because it requires an Insurtech firm to balance the efficiency gains offered by AI-driven underwriting with the fundamental regulatory obligation to ensure fair and non-discriminatory risk assessment. The challenge lies in identifying and mitigating potential biases embedded within the AI algorithms, which could inadvertently lead to unfair outcomes for certain customer segments. Careful judgment is required to ensure that technological advancement does not compromise consumer protection and regulatory compliance. The correct approach involves a robust, multi-layered validation process for the AI underwriting model. This includes rigorous testing for bias across various demographic and socioeconomic factors, ongoing monitoring of model performance in real-world applications, and establishing clear human oversight mechanisms for complex or disputed underwriting decisions. This approach is right because it directly addresses the regulatory imperative to prevent unfair discrimination in insurance. Specifically, it aligns with principles of fairness and transparency often embedded in insurance regulations, which mandate that underwriting decisions must be based on relevant risk factors and not on prohibited grounds of discrimination. The ongoing monitoring and human oversight ensure that the AI system remains compliant and that any emergent biases are identified and rectified promptly, upholding the firm's duty of care to its customers and adhering to regulatory expectations for responsible AI deployment in financial services. An incorrect approach that relies solely on the AI's historical accuracy without independent bias testing fails to meet regulatory standards. This is because historical data can itself contain systemic biases, which the AI would then perpetuate and potentially amplify. Such an approach risks violating regulations that prohibit discrimination based on protected characteristics, leading to potential fines and reputational damage. Another incorrect approach that prioritizes speed of underwriting over thorough validation of the AI model's fairness is also professionally unacceptable. While efficiency is a goal in Insurtech, it cannot come at the expense of regulatory compliance and ethical underwriting practices. This approach neglects the fundamental duty to assess risk fairly and could lead to discriminatory outcomes, contravening consumer protection laws. A third incorrect approach that involves a black box AI system, where the decision-making process is opaque and unexplainable, is problematic. Regulators increasingly expect transparency in AI systems used in financial services. The inability to explain how a decision was reached makes it impossible to demonstrate compliance with anti-discrimination laws or to investigate and rectify any unfair outcomes, thereby failing to meet the spirit and letter of regulatory requirements for accountability. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical considerations from the outset of AI implementation. This involves proactive risk assessment, establishing clear governance structures for AI, investing in bias detection and mitigation tools, and fostering a culture of continuous learning and adaptation to evolving regulatory landscapes. The process should involve cross-functional teams, including legal, compliance, data science, and underwriting, to ensure a holistic approach to AI governance. Question 4. Process analysis reveals that an Insurtech firm is considering integrating a new AI-powered underwriting tool that promises to significantly speed up policy issuance. However, the firm has not yet conducted a detailed review of how this AI tool's data processing and decision-making algorithms align with the UK's Financial Conduct Authority (FCA) principles and the General Data Protection Regulation (GDPR). Which of the following represents the most appropriate and compliant approach for the Insurtech firm to take? Option A. Prioritize the speed of market entry and the potential competitive advantage offered by the AI tool, deferring any detailed regulatory compliance checks until after the tool has been fully integrated and is in widespread customer use. Option B. Proceed with the integration of the AI underwriting tool immediately, assuming the technology provider has ensured all regulatory requirements are met, and address any potential issues that may arise post-deployment. Option C. Deploy the AI underwriting tool on a limited internal basis for testing purposes only, without informing customers or regulators, to gauge its performance before a full rollout. Option D. Conduct a comprehensive regulatory impact assessment of the AI underwriting tool, focusing on data privacy, algorithmic fairness, transparency, and potential impacts on consumer outcomes before proceeding with integration. The correct answer is B. Proceed with the integration of the AI underwriting tool immediately, assuming the technology provider has ensured all regulatory requirements are met, and address any potential issues that may arise post-deployment. Explanation. This scenario presents a professional challenge because the Insurtech firm is attempting to integrate a novel technology into its existing operational framework without a clear understanding of how it interacts with established regulatory requirements. The core difficulty lies in balancing innovation with compliance, ensuring that the new technology, while offering potential benefits, does not inadvertently create new risks or violate existing consumer protection laws. Careful judgment is required to assess the technology's impact on data privacy, security, and fairness, and to proactively address any potential regulatory gaps. The correct approach involves a thorough, proactive assessment of the new technology against the relevant regulatory framework, specifically focusing on data protection, consumer rights, and operational resilience as mandated by the Financial Conduct Authority, FCA, in the UK. This includes identifying how the technology processes personal data, ensuring adequate security measures are in place, and verifying that the technology's outputs are fair and transparent to consumers. This aligns with the FCA's principles of treating customers fairly and maintaining market integrity, and the General Data Protection Regulation, GDPR, requirements for data processing. An incorrect approach would be to deploy the technology without a comprehensive regulatory impact assessment. This failure to proactively identify and mitigate risks could lead to breaches of data protection laws, such as GDPR, by potentially mishandling sensitive customer information or failing to obtain appropriate consent. It also risks violating FCA principles by offering products or services that are not transparent or fair to consumers, potentially leading to regulatory sanctions, reputational damage, and loss of customer trust. Another incorrect approach is to rely solely on the technology provider's assurances of compliance without independent verification. While a provider may claim adherence to regulations, the Insurtech firm remains ultimately responsible for ensuring its operations meet legal and ethical standards. This oversight could result in hidden compliance deficiencies that only come to light during a regulatory review or after a data breach, leading to significant penalties. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should prioritize understanding the regulatory landscape, identifying potential compliance risks associated with new technologies, and developing mitigation strategies. It necessitates collaboration between legal, compliance, and technology teams to ensure a holistic view. Furthermore, it requires a commitment to ongoing monitoring and adaptation as both technology and regulations evolve, fostering a culture of proactive compliance rather than reactive remediation. Question 5. Benchmark analysis indicates that a UK-based Insurtech firm is exploring the integration of advanced mobile technology, including fingerprint and facial recognition for policyholder authentication and real-time location data for dynamic risk assessment in motor insurance. The firm is keen to leverage these features to streamline onboarding and personalize pricing. Which of the following approaches best aligns with regulatory expectations and ethical considerations for this scenario? Option A. Deploy fingerprint and facial recognition for authentication and real-time location data for risk assessment, relying on the general terms and conditions of the policy to cover data usage, assuming policyholders understand and accept these terms upon purchase. Option B. Implement fingerprint and facial recognition for authentication and utilize real-time location data for risk assessment, ensuring clear opt-in consent is obtained from policyholders through a prominent in-app notification, and providing a detailed, easily accessible privacy policy explaining data usage. Option C. Integrate fingerprint and facial recognition for authentication and real-time location data for risk assessment, proceeding with data collection and usage without explicit consent, arguing that these technologies are standard for modern digital services and essential for competitive pricing. Option D. Utilize fingerprint and facial recognition for authentication and real-time location data for risk assessment, but only collect and process this data if the policyholder actively opts out of these specific data collection features, assuming consent by default. Correct answer is B. Implement fingerprint and facial recognition for authentication and utilize real-time location data for risk assessment, ensuring clear opt-in consent is obtained from policyholders through a prominent in-app notification, and providing a detailed, easily accessible privacy policy explaining data usage. Explanation. This scenario is professionally challenging because it requires balancing innovation in mobile technology with established regulatory obligations concerning data privacy and consumer protection within the Insurtech Foundation certificate-specified jurisdiction, assumed to be the UK for this example, aligning with CISI guidelines. The rapid evolution of mobile capabilities, such as advanced biometric authentication and location-based services, presents opportunities for enhanced customer experience and operational efficiency, but also introduces new risks related to data security and potential misuse. Professionals must navigate these complexities to ensure compliance and maintain consumer trust. The correct approach involves a thorough risk assessment and the implementation of robust data protection measures, including obtaining explicit consent for data processing and providing clear, accessible privacy notices. This aligns with the principles of the UK's General Data Protection Regulation, UK GDPR, and the Financial Conduct Authority's, FCA, consumer protection rules. Specifically, it upholds the requirements for lawful processing of personal data, transparency, and accountability, ensuring that the use of mobile technology is both innovative and compliant, thereby safeguarding customer data and maintaining regulatory adherence. An incorrect approach that prioritizes rapid deployment of new mobile features without adequate data protection safeguards would fail to meet the stringent requirements of UK GDPR, particularly concerning data minimization, purpose limitation, and the security of personal data. This could lead to significant regulatory penalties and reputational damage. Another incorrect approach that relies on implied consent or vague privacy policies for the collection and use of sensitive mobile data would violate the principles of explicit consent and transparency mandated by UK GDPR and FCA consumer protection rules, exposing both the company and its customers to undue risk. Furthermore, an approach that neglects to conduct regular security audits of mobile applications and associated data handling processes would be a failure of due diligence, potentially leaving customer data vulnerable to breaches and contravening the FCA's focus on operational resilience and cybersecurity. Professionals should adopt a risk-based approach, starting with a comprehensive understanding of the regulatory landscape. This involves identifying potential data privacy and security risks associated with new mobile technologies, evaluating the likelihood and impact of these risks, and implementing proportionate controls. Continuous monitoring and adaptation of these controls in response to evolving threats and regulatory guidance are crucial. A proactive stance on data protection and consumer rights, integrated into the design and development of Insurtech solutions, is essential for sustainable innovation and regulatory compliance. Question 6. Benchmark analysis indicates that an Insurtech firm has developed a proprietary artificial intelligence platform that analyzes vast datasets to predict insurance risk with unprecedented accuracy. This platform is intended to be the core underwriting engine for a new range of insurance products. The firm is unsure whether this specific application of AI in underwriting falls under existing insurance regulatory frameworks or requires a new form of authorization. Which of the following represents the most prudent and compliant approach? Option A. Seek legal advice solely from external counsel specializing in technology law, assuming that insurance-specific regulations are not applicable to AI-driven underwriting. Option B. Proactively engage with the relevant financial services regulator to seek guidance on the platform's compliance with existing insurance and data protection legislation, potentially exploring regulatory sandbox opportunities. Option C. Implement a robust internal compliance framework that mirrors regulatory requirements, but without seeking explicit confirmation or approval from the governing regulatory body. Option D. Proceed with the launch of the platform, relying on the firm's internal assessment that the innovative nature of the AI places it outside the scope of current insurance regulations. The correct answer is B. Proactively engage with the relevant financial services regulator to seek guidance on the platform's compliance with existing insurance and data protection legislation, potentially exploring regulatory sandbox opportunities. Explanation. This scenario presents a professional challenge because Insurtech firms operate at the intersection of rapidly evolving technology and established financial services regulation. Balancing innovation with compliance requires a nuanced understanding of existing frameworks and how they apply to new business models. The specific challenge here lies in determining the appropriate regulatory oversight for a novel data analytics platform that underpins insurance underwriting. Without a clear, pre-existing regulatory precedent for such a specific application, careful judgment is required to ensure consumer protection and market integrity while fostering innovation. The correct approach involves proactively engaging with the relevant regulatory body to seek clarity and guidance on the application of existing insurance and data protection laws to the new Insurtech platform. This demonstrates a commitment to compliance and responsible innovation. Specifically, it aligns with the principles of regulatory sandbox initiatives often found in financial services, which encourage testing new products and services under regulatory supervision. This proactive engagement ensures that the firm operates within the spirit and letter of the law, safeguarding consumer data and preventing potential market abuse, thereby upholding the foundational principles of the Insurtech Foundation's certificate syllabus, which emphasizes regulatory awareness and responsible technology adoption. An incorrect approach would be to assume that because the platform is Insurtech and uses advanced analytics, it falls outside traditional insurance regulation without explicit confirmation. This assumption risks noncompliance with consumer protection laws, data privacy regulations, such as GDPR if operating within the UK, and potentially market conduct rules. Another incorrect approach is to proceed with the launch based solely on internal legal counsel's interpretation without seeking external regulatory validation, especially when dealing with novel applications of technology. This bypasses the crucial step of ensuring alignment with supervisory expectations and could lead to significant retrospective regulatory action. A third incorrect approach is to implement a self-regulatory framework that mimics regulatory requirements but has not been approved or acknowledged by the governing authority. While well-intentioned, this lacks the authoritative oversight necessary to guarantee consumer trust and regulatory acceptance. Professionals should adopt a decision-making framework that prioritizes proactive engagement with regulators when introducing innovative products or services that touch upon regulated activities. This involves identifying potential regulatory touchpoints early in the development lifecycle, conducting thorough due diligence on applicable laws and guidelines, and seeking formal clarification or approval where ambiguity exists. The Insurtech Foundation's certificate syllabus emphasizes this proactive and compliant approach to innovation. Question 7. What factors determine the appropriate level of due diligence and contractual safeguards an Insurtech firm must implement when migrating sensitive customer data to a cloud computing environment, ensuring compliance with UK financial services regulations and data protection laws? Option A. The cloud service provider's adherence to relevant data protection regulations, their security certifications, the clarity of their incident response protocols, and the robustness of contractual provisions regarding data security, access, and breach notification. Option B. The assumption that standard cloud service provider terms of service adequately cover all regulatory requirements without further review or negotiation. Option C. The internal IT department's familiarity with the cloud provider's general reputation, irrespective of specific security audits or regulatory compliance assessments. Option D. The perceived cost-effectiveness and speed of deployment offered by the cloud service provider, with minimal emphasis on their regulatory compliance or security track record. The correct answer is A. The cloud service provider's adherence to relevant data protection regulations, their security certifications, the clarity of their incident response protocols, and the robustness of contractual provisions regarding data security, access, and breach notification. Explanation. This scenario presents a professional challenge for an Insurtech firm as it navigates the adoption of cloud computing for sensitive customer data. The core difficulty lies in balancing the operational efficiencies and scalability offered by cloud solutions with the stringent regulatory obligations and ethical duties to protect customer data. Insurtech firms operate in a highly regulated environment, and any misstep in data security or compliance can lead to significant financial penalties, reputational damage, and loss of customer trust. Careful judgment is required to select cloud service providers and implement security measures that meet or exceed regulatory standards. The correct approach involves a comprehensive due diligence process that prioritizes regulatory compliance and data security. This includes thoroughly vetting potential cloud service providers for their adherence to relevant data protection laws, their security certifications, and their incident response capabilities. It also necessitates establishing clear contractual agreements that define responsibilities for data protection, security, and breach notification. Implementing robust technical and organizational security measures, such as encryption, access controls, and regular audits, is paramount. This approach is correct because it directly addresses the regulatory requirements of data protection and privacy, which are fundamental in the financial services and insurance sectors. Specifically, it aligns with the principles of data minimization, purpose limitation, and security by design, ensuring that customer data is handled responsibly and in accordance with legal mandates. An incorrect approach would be to prioritize cost savings or speed of implementation over regulatory compliance and security. For instance, selecting a cloud provider solely based on the lowest price without adequately assessing their security posture or contractual terms would be a significant regulatory failure. This overlooks the duty of care owed to customers and the legal obligations to safeguard their personal information. Another incorrect approach would be to assume that a cloud provider's standard terms of service are sufficient without seeking specific assurances or amendments regarding data residency, breach notification, and audit rights. This demonstrates a lack of due diligence and a failure to proactively manage regulatory risk, potentially violating data protection laws that require explicit controls and accountability. Professionals should employ a risk-based decision-making framework when considering cloud adoption. This involves identifying potential risks associated with cloud computing, assessing their likelihood and impact, and implementing appropriate mitigation strategies. Key considerations include understanding the specific regulatory landscape applicable to the Insurtech firm, evaluating the security and compliance capabilities of cloud providers, and ensuring that contractual agreements provide adequate protection and recourse. A proactive and diligent approach, grounded in regulatory understanding and a commitment to data security, is essential for making sound professional decisions. Question 8. Examination of the data shows a significant increase in suspicious claims patterns for a new line of parametric insurance products, suggesting a potential rise in fraudulent activity. The Insurtech firm's current fraud detection system is largely rule-based and has a high rate of false positives, leading to customer complaints. The firm is considering several approaches to address this. Which of the following approaches best aligns with the regulatory framework for fraud detection and customer data protection in the context of Insurtech operations? Option A. Share raw customer claims data with external data brokers to identify potential fraud rings, without obtaining explicit customer consent for this data sharing. Option B. Immediately block all claims exhibiting any deviation from historical norms, without further investigation, to prevent any potential financial loss from fraud. Option C. Reduce investment in fraud detection technology to cut costs, relying on manual review of only the most egregious claims, despite the observed increase in suspicious patterns. Option D. Implement a sophisticated machine learning model that analyzes a wider range of data points, including behavioral analytics, with a mandatory human review process for any claims flagged as high risk, and ensure clear communication to customers about data usage for fraud prevention. The correct answer is D. Implement a sophisticated machine learning model that analyzes a wider range of data points, including behavioral analytics, with a mandatory human review process for any claims flagged as high risk, and ensure clear communication to customers about data usage for fraud prevention. Explanation. This scenario is professionally challenging because it requires balancing the imperative to prevent fraud with the need to maintain customer trust and comply with data protection regulations. Insurtech firms handle vast amounts of sensitive customer data, and the application of fraud detection tools must be both effective and ethically sound, adhering strictly to the regulatory framework governing insurance and data privacy. The challenge lies in identifying suspicious patterns without unfairly penalizing legitimate customers or infringing on their privacy rights. The correct approach involves a multi-layered strategy that combines advanced analytics with human oversight and clear communication. This approach is justified by regulatory requirements that mandate robust fraud prevention measures, while also emphasizing fair treatment of customers and data security. Specifically, regulatory frameworks often require insurers to have systems in place to detect and prevent fraud, but these systems must be designed and operated in a way that is transparent, non-discriminatory, and compliant with data protection laws. This often means using anonymized or pseudonymized data where possible, ensuring that any automated decisions are subject to human review, and providing customers with recourse if they believe they have been unfairly flagged. An incorrect approach that relies solely on automated flagging without human review is professionally unacceptable because it risks false positives, leading to customer dissatisfaction and potential regulatory breaches related to unfair treatment. Such an approach may also violate data protection principles by processing sensitive data without adequate safeguards or justification for automated decision-making. Another incorrect approach that involves sharing raw customer data with third-party analytics firms without explicit consent or robust data-sharing agreements is also professionally unacceptable. This directly contravenes data protection regulations, which typically require informed consent for data processing and sharing, and can lead to severe penalties for data breaches and misuse. A third incorrect approach that prioritizes immediate cost savings by neglecting investment in sophisticated fraud detection technology, even when red flags are present, is professionally unacceptable. While cost efficiency is important, regulatory obligations and ethical duties to protect policyholders and the integrity of the insurance market necessitate proactive fraud prevention. Failing to invest in appropriate tools can lead to significant financial losses from fraud, reputational damage, and potential regulatory scrutiny for inadequate controls. Professionals should adopt a decision-making framework that begins with understanding the specific regulatory obligations related to fraud detection and data privacy within their jurisdiction. This involves assessing the risks associated with potential fraud and the impact of proposed detection methods on customer experience and data rights. The framework should then involve evaluating technological solutions based on their effectiveness, compliance with regulations, and ethical implications. Crucially, it requires establishing clear protocols for human oversight, data governance, and customer communication, ensuring that any automated processes are transparent and subject to review. Continuous monitoring and adaptation of fraud detection strategies are also essential to stay ahead of evolving fraud tactics while remaining compliant. Question 9. When evaluating the implementation of an artificial intelligence (AI) system for life insurance underwriting, which approach best ensures compliance with regulatory frameworks and ethical principles concerning fairness and transparency? Option A. Prioritize rapid market entry and cost savings by launching the AI underwriting system with minimal human oversight, relying primarily on automated processes. Option B. Deploy the AI system based on its demonstrated historical performance data, assuming that past accuracy implies future fairness. Option C. Implement the AI system after extensive testing for algorithmic bias across protected characteristics, ensuring explainability of its decisions, and establishing clear protocols for human oversight and intervention. Option D. Focus exclusively on the technical accuracy and predictive power of the AI model, without conducting specific assessments for discriminatory outcomes or transparency. Correct answer is C. Implement the AI system after extensive testing for algorithmic bias across protected characteristics, ensuring explainability of its decisions, and establishing clear protocols for human oversight and intervention. Explanation. This scenario presents a professional challenge because it requires an Insurtech firm to navigate the complex interplay between innovative technology, customer data, and the stringent regulatory requirements governing life insurance. The core challenge lies in ensuring that the use of AI for underwriting, while potentially offering efficiency and personalized pricing, does not inadvertently lead to discriminatory practices or a lack of transparency, which are critical ethical and regulatory concerns in the insurance sector. Careful judgment is required to balance the benefits of technological advancement with the fundamental principles of fairness and consumer protection. The correct approach involves a robust, multi-layered validation process that goes beyond mere algorithmic accuracy. This includes rigorous testing of the AI model for bias across protected characteristics, ensuring that the underwriting decisions are explainable and auditable, and establishing clear protocols for human oversight and intervention. This approach is ethically sound and regulatorily compliant because it directly addresses the potential for AI to perpetuate or introduce unfair discrimination, a key concern for regulators like the Financial Conduct Authority, FCA, in the UK. The emphasis on explainability and auditability aligns with principles of transparency and accountability, which are paramount in financial services. Furthermore, maintaining human oversight ensures that complex or edge cases are handled appropriately, preventing potential harm to consumers and upholding the duty of care. An incorrect approach would be to solely rely on the AI's historical performance data to validate its fairness. This is ethically and regulatorily unacceptable because historical data can itself contain embedded biases, meaning the AI could learn and perpetuate discriminatory patterns without explicit detection. This fails to meet the regulatory expectation of proactive bias mitigation and could lead to unfair outcomes for certain customer groups, violating principles of fairness and non-discrimination. Another incorrect approach is to prioritize speed to market and cost reduction by implementing the AI underwriting system with minimal human oversight. This is ethically and regulatorily flawed as it bypasses crucial checks and balances. The absence of adequate human review increases the risk of erroneous or discriminatory decisions going unnoticed, potentially leading to significant consumer detriment and regulatory sanctions. It undermines the principle of treating customers fairly and the insurer's responsibility to ensure its products and services are suitable and not exploitative. A third incorrect approach is to focus solely on the technical accuracy of the AI's predictions without considering the ethical implications of its outputs. While technical accuracy is important, it does not guarantee fairness or compliance. Regulators expect insurers to demonstrate a comprehensive understanding of how their AI systems impact consumers, including potential for bias and lack of transparency. A purely technical focus neglects the broader ethical and regulatory obligations to ensure that the AI serves customers fairly and transparently. The professional decision-making process for similar situations should involve a risk-based approach that integrates ethical considerations and regulatory requirements from the outset of AI development and deployment. This includes establishing clear governance frameworks for AI, conducting thorough impact assessments, engaging with legal and compliance experts, and implementing continuous monitoring and evaluation mechanisms. Professionals should prioritize transparency, fairness, and accountability, ensuring that technological innovation serves to enhance, rather than compromise, customer well-being and regulatory compliance. Question 10. Risk assessment procedures indicate that a new direct-to-consumer (DTC) Insurtech platform is experiencing rapid customer acquisition, but faces potential challenges in consistently adhering to regulatory disclosure requirements during the automated onboarding process. Which of the following approaches best mitigates these risks while ensuring regulatory compliance? Option A. Prioritizing speed to market and user experience enhancements, with a plan to address any identified regulatory gaps through future software updates as they arise. Option B. Outsourcing all compliance oversight to a third-party vendor, assuming their expertise will fully cover the Insurtech firm's regulatory obligations. Option C. Implementing a comprehensive compliance by design framework that integrates regulatory checks and balances directly into the platform's development lifecycle, supported by ongoing automated monitoring and periodic manual audits. Option D. Relying on post-launch manual reviews of a sample of customer onboarding journeys to identify and rectify any disclosure omissions, assuming the automated system is generally reliable. The correct answer is C. Implementing a comprehensive compliance by design framework that integrates regulatory checks and balances directly into the platform's development lifecycle, supported by ongoing automated monitoring and periodic manual audits. Explanation. This scenario presents a professional challenge because Insurtech firms operating directly to consumer (DTC) models must balance innovation and customer acquisition with stringent regulatory obligations. The core difficulty lies in ensuring that the digital interfaces and automated processes used for customer onboarding and policy issuance comply with all relevant consumer protection laws and financial services regulations. This requires a proactive and integrated approach to compliance, rather than treating it as an afterthought. Careful judgment is needed to design systems that are both user-friendly and legally sound, particularly concerning transparency, disclosure, and fair treatment of consumers. The correct approach involves embedding regulatory compliance into the design and development lifecycle of the DTC platform. This means conducting thorough regulatory impact assessments at each stage, from initial concept to deployment and ongoing updates. It necessitates clear documentation of compliance controls, regular audits, and a robust process for handling customer complaints and regulatory inquiries. This approach is justified by regulations such as the Financial Services and Markets Act 2000 FSMA in the UK, which mandates that firms act honestly, fairly, and professionally in accordance with the best interests of their clients. The FCA's Principles for Businesses and Specific Conduct of Business Rules, COBS, further emphasize the need for clear, fair, and not misleading communications, appropriate product governance, and effective risk management, all of which are best achieved through a proactive, integrated compliance strategy. An incorrect approach that focuses solely on rapid market entry and user experience without adequate regulatory due diligence would fail to meet these obligations. This could lead to breaches of consumer protection laws, such as those requiring clear and understandable policy terms, and could result in significant fines, reputational damage, and loss of consumer trust. Another incorrect approach, which relies on post-launch manual checks for compliance, is insufficient because it is reactive and may not identify systemic issues in the automated processes. This fails to uphold the FCA's expectation of proactive compliance and robust governance. A third incorrect approach, where compliance is delegated entirely to a third-party vendor without sufficient oversight, also presents a regulatory risk, as the primary responsibility for compliance remains with the Insurtech firm itself. Professionals should adopt a decision-making framework that prioritizes a compliance by design philosophy. This involves understanding the specific regulatory landscape relevant to DTC insurance, e.g., UK regulations under the FCA, identifying potential compliance risks associated with digital sales channels, and proactively designing controls and processes to mitigate these risks. Regular training for all staff involved in product development, marketing, and customer service on regulatory requirements is also crucial. A continuous monitoring and improvement cycle, informed by customer feedback and regulatory updates, ensures that the DTC offering remains compliant and ethically sound. Question 11. The efficiency study reveals a significant lack of understanding among new Insurtech employees regarding the historical development of insurance principles and their impact on current regulatory frameworks. Which of the following approaches best addresses this deficiency in a manner compliant with the Insurtech Foundation certificate's focus on UK regulations? Option A. Encourage informal knowledge-sharing sessions where experienced employees share anecdotes and personal insights about the insurance industry's past. Option B. Focus training solely on the latest Insurtech innovations, assuming historical context is implicitly understood through practical application. Option C. Implement a mandatory onboarding module that details key historical milestones in insurance, with a specific focus on how these events shaped UK insurance law and regulatory oversight, referencing relevant FCA guidance. Option D. Provide a broad overview of global insurance history, highlighting technological innovations without delving into specific UK regulatory evolution. The correct answer is C. Implement a mandatory onboarding module that details key historical milestones in insurance, with a specific focus on how these events shaped UK insurance law and regulatory oversight, referencing relevant FCA guidance. Explanation. The efficiency study reveals a significant gap in the understanding of historical insurance practices among new Insurtech employees. This scenario is professionally challenging because a foundational understanding of insurance history is crucial for appreciating the evolution of regulatory frameworks, risk management techniques, and the very principles that underpin modern insurance. Without this context, employees may struggle to grasp the rationale behind current regulations, the impact of past crises on present-day practices, and the potential pitfalls of novel Insurtech solutions. Careful judgment is required to select the most effective and compliant method for imparting this knowledge. The correct approach involves integrating a module on the history of insurance, specifically focusing on key milestones and their regulatory implications within the UK's financial services landscape, into the onboarding process. This is the best professional practice because it directly addresses the identified knowledge gap with relevant, contextually appropriate information. The Financial Conduct Authority (FCA) Handbook, for instance, emphasizes the importance of firms understanding their market and the historical context that shapes it. By providing this historical perspective, Insurtech firms can ensure their employees develop a robust understanding of the regulatory environment, fostering a culture of compliance and informed decision-making, which aligns with the FCA's principles of treating customers fairly and maintaining market integrity. An incorrect approach would be to solely rely on anecdotal evidence or informal discussions to convey historical insurance knowledge. This is professionally unacceptable as it lacks structure, accuracy, and regulatory endorsement. It risks perpetuating myths or incomplete information, failing to provide the necessary depth for employees to understand the evolution of regulatory requirements and ethical considerations. Such an approach would not satisfy the FCA's expectations for comprehensive training and development. Another incorrect approach is to focus exclusively on the technological advancements of Insurtech, without acknowledging the historical evolution of insurance principles. While innovation is key, neglecting the foundational knowledge of how insurance developed, including significant historical events like the development of Lloyd's of London or the impact of major disasters on actuarial science and regulation, leaves employees ill-equipped to understand the why behind current practices. This can lead to a superficial understanding of risk and regulation, potentially resulting in non-compliance or the development of products that, while technologically advanced, may not adequately address underlying insurance principles or regulatory expectations. A third incorrect approach would be to provide a generic overview of insurance history without tailoring it to the specific regulatory jurisdiction of the UK. This is professionally flawed because the Insurtech Foundation certificate is jurisdiction-specific. Understanding the historical development of insurance within the UK, including the role of bodies like the ABI and the evolution of legislation such as the Insurance Act 2015, is critical for compliance and effective operation within that market. A generic approach fails to equip employees with the precise knowledge required to navigate the UK's regulatory landscape. A professional decision-making process for similar situations should involve 1. Identifying knowledge gaps through objective means like efficiency studies. 2. Evaluating potential solutions against the specific regulatory requirements and ethical standards of the relevant jurisdiction, in this case, UK regulations and FCA guidelines. 3. Prioritizing approaches that offer structured, accurate, and contextually relevant information. 4. Ensuring training materials are comprehensive and contribute to a culture of compliance and informed practice. Question 12. Regulatory review indicates that a UK-based Insurtech firm is exploring the integration of EOT devices for real-time risk monitoring in home insurance policies. The firm is considering devices that can detect water leaks, monitor temperature fluctuations, and assess structural integrity. Which of the following approaches best aligns with the regulatory framework and ethical considerations for handling the data generated by these devices? Option A. Share the collected EOT data freely with third-party technology providers for further analysis and product development without explicit policyholder consent, assuming this enhances overall service offerings. Option B. Implement the EOT devices immediately to gather data, and then develop data privacy policies and consent mechanisms retrospectively to align with UK GDPR and FCA requirements. Option C. Focus on the technological capabilities of the EOT devices to reduce claims, and address any data privacy concerns only if a policyholder raises a specific complaint. Option D. Prioritize obtaining explicit, informed consent from policyholders for all data collection by EOT devices, clearly outlining what data will be collected, how it will be used for risk assessment and pricing, and the security measures in place, while also consulting with the Information Commissioner's Office (ICO) for guidance. The correct answer is B. Implement the EOT devices immediately to gather data, and then develop data privacy policies and consent mechanisms retrospectively to align with UK GDPR and FCA requirements. Explanation: this scenario is professionally challenging because it requires balancing the innovative potential of Insurtech, specifically EOT devices for risk monitoring, with the stringent data protection and consumer rights regulations that govern the insurance sector. The core tension lies in how insurers collect, use, and secure sensitive personal data generated by these devices, while also ensuring transparency and fairness to policyholders. Careful judgment is required to navigate these complexities without stifling innovation or compromising regulatory compliance. The correct approach involves proactively engaging with relevant regulatory bodies and seeking clear guidance on data handling, consent mechanisms, and cybersecurity standards for EOT devices. This demonstrates a commitment to responsible innovation and adherence to the spirit and letter of regulations like the UK's General Data Protection Regulation, UK GDPR, and the Financial Conduct Authority's, FCA, principles. By prioritizing transparency with policyholders about data collection and usage, and implementing robust security measures, the insurer builds trust and mitigates legal and reputational risks. This aligns with the FCA's focus on treating customers fairly and ensuring adequate data protection, as well as the UK GDPR emphasis on lawful processing, data minimization, and security. An incorrect approach that focuses solely on the technological benefits of EOT devices without adequately addressing data privacy and security would fail to meet regulatory obligations. For instance, implementing EOT devices without obtaining explicit and informed consent for data collection, or without robust encryption and access controls, would violate UK GDPR principles regarding lawful processing and data security. This could lead to significant fines and reputational damage. Another incorrect approach, which is to deploy devices and then retroactively seek to comply with data protection laws, is also professionally unacceptable. This reactive stance demonstrates a lack of foresight and a disregard for regulatory requirements, potentially exposing the insurer to breaches of data protection legislation and the FCA's principles of good conduct. Professionals should adopt a proactive, risk-based approach. This involves conducting thorough due diligence on the data privacy and security implications of any new Insurtech solution, including EOT devices. Engaging legal and compliance experts early in the development process is crucial. Furthermore, a commitment to ongoing monitoring and adaptation to evolving regulatory landscapes is essential. This decision-making framework prioritizes ethical considerations and regulatory compliance alongside technological advancement, ensuring that innovation serves to enhance customer value without compromising fundamental rights and legal obligations. Question 13. Stakeholder feedback indicates that a new Insurtech platform is considering a partnership with a third-party data analytics provider to enhance personalized customer offerings. This provider has a reputation for innovative analytics but has not undergone a formal security audit by the Insurtech firm. The proposed integration would involve sharing anonymized customer policy data. What is the most responsible course of action? Option A. Proceed with the integration immediately to capitalize on the partner's innovative capabilities and gain a competitive edge, assuming anonymized data poses minimal risk. Option B. Share only aggregated, non-identifiable data with the partner, believing that anonymization is sufficient protection regardless of the partner's security posture. Option C. Integrate the systems but implement additional internal monitoring to detect any potential data breaches, relying on the partner's claims of data security. Option D. Delay the integration until a comprehensive due diligence process is completed, including a thorough review of the partner's data security practices, privacy policies, and compliance certifications. The correct answer is A. Proceed with the integration immediately to capitalize on the partner's innovative capabilities and gain a competitive edge, assuming anonymized data poses minimal risk. Explanation: this scenario presents a professional challenge because it requires balancing the potential benefits of a new integration with the critical need to protect customer data and maintain regulatory compliance. The Insurtech Foundation's certificate exam emphasizes the importance of ethical conduct and adherence to regulatory frameworks, particularly concerning data privacy and security when partnering with third-party providers. Careful judgment is required to ensure that any integration enhances customer experience without compromising trust or violating established rules. The correct approach involves conducting a thorough due diligence process on the potential partner, focusing on their data security protocols, privacy policies, and compliance with relevant regulations. This proactive stance ensures that the integration is built on a foundation of trust and security, aligning with the principles of responsible innovation and customer protection. Regulatory justification stems from the fundamental duty of care owed to customers and the explicit requirements of data protection laws, which mandate that firms take reasonable steps to safeguard personal information, especially when shared with third parties. Ethically, this approach upholds transparency and respects customer autonomy by ensuring their data is handled responsibly. An incorrect approach that prioritizes speed to market over security would fail to adequately assess the partner's data handling practices. This could lead to regulatory breaches, such as violations of data protection principles requiring data minimization and purpose limitation. Ethically, it demonstrates a disregard for customer privacy and could erode trust, potentially leading to reputational damage and loss of business. Another incorrect approach that involves proceeding with the integration without a clear data sharing agreement or understanding of the partner's data usage would be equally problematic. This lack of clarity creates significant compliance risks, as it becomes difficult to demonstrate accountability for data processing activities. It also violates the ethical principle of transparency, as customers would not be fully informed about how their data is being used by third parties. The professional reasoning process for such situations should involve a risk-based assessment. This means identifying potential risks associated with the partnership and integration, evaluating their likelihood and impact, and implementing appropriate mitigation strategies. Key steps include understanding the regulatory landscape, defining clear data governance policies, conducting thorough vendor assessments, and establishing robust contractual agreements that clearly outline data responsibilities and security obligations. Prioritizing customer trust and regulatory compliance should be paramount throughout the decision-making process. Question 14. Strategic planning requires a thorough assessment of how new Insurtech customer experience initiatives impact regulatory compliance and consumer protection. Which of the following approaches best addresses this requirement? Option A. Developing a robust framework for assessing the regulatory and ethical implications of all new customer experience technologies and processes prior to their deployment, including data privacy, impact assessments, and fair treatment reviews. Option B. Implementing new customer engagement features immediately to gain a competitive advantage, with regulatory reviews conducted only after launch if issues arise. Option C. Focusing solely on the technological innovation of customer experience features, assuming that regulatory compliance will be addressed through general legal counsel. Option D. Relying on industry best practices for customer experience, without specific consideration for the unique regulatory environment of the Insurtech sector. The correct answer is B. Implementing new customer engagement features immediately to gain a competitive advantage, with regulatory reviews conducted only after launch if issues arise. Explanation. This scenario is professionally challenging because it requires balancing innovation in customer experience with the stringent regulatory obligations of the financial services sector, specifically within the context of Insurtech. The core challenge lies in ensuring that advancements in customer interaction, driven by technology, do not inadvertently lead to breaches of consumer protection rules, data privacy laws, or fair treatment principles. Careful judgment is required to identify and mitigate risks associated with new digital channels and data utilization. The correct approach involves a proactive and integrated risk management strategy that embeds regulatory compliance and ethical considerations into the design and deployment of new customer experience initiatives. This means conducting thorough impact assessments before launching new features, ensuring that all data handling practices are transparent and compliant with data protection regulations, and that customer interactions are fair, clear, and not misleading. This approach aligns with the overarching regulatory objective of protecting consumers and maintaining market integrity, as mandated by frameworks such as the FCA's Consumer Duty in the UK, which emphasizes delivering good outcomes for retail customers. An approach that prioritizes rapid deployment of new features without adequate pre-launch regulatory review risks violating consumer protection laws. For instance, if a new AI-driven chatbot provides advice that is not clearly delineated as automated and could be misinterpreted as regulated financial advice, this could lead to breaches of conduct rules. Similarly, collecting and using customer data without explicit consent or for purposes beyond what was communicated to the customer would contravene data privacy regulations like the GDPR. An approach that focuses solely on engagement metrics without considering the fairness and transparency of the customer journey could also lead to outcomes that are detrimental to consumers, thereby failing to meet regulatory expectations for fair treatment. Professionals should adopt a decision-making framework that begins with understanding the regulatory landscape relevant to their operations. This involves identifying all applicable laws and guidelines, such as those pertaining to consumer protection, data privacy, and financial conduct. Before implementing any new customer experience initiative, a comprehensive risk assessment should be performed, evaluating potential impacts on customer outcomes, data security, and regulatory compliance. This assessment should inform the design of the initiative, ensuring that safeguards are built in from the outset. Continuous monitoring and feedback loops are also crucial to identify and address any emerging issues post-launch, ensuring ongoing adherence to regulatory standards and ethical principles. Question 15. The audit findings indicate that a newly implemented machine learning algorithm used for pricing personal lines insurance policies may be producing disparate outcomes for certain demographic groups, despite achieving high overall accuracy. Which of the following is the most appropriate course of action for the Insurtech firm? Option A. Classify the algorithm as a black box and state that its internal workings are too complex to audit for fairness, deferring any further investigation. Option B. Conduct a thorough investigation into the algorithm's training data and model logic to identify and mitigate any embedded biases, and document the findings and remediation steps. Option C. Immediately revert to the previous, less sophisticated pricing model to avoid any potential regulatory scrutiny related to the new algorithm's outcomes. Option D. Accept the algorithm's pricing decisions as valid, given its high overall accuracy, and focus on marketing efforts to attract a broader customer base. The correct answer is B. Conduct a thorough investigation into the algorithm's training data and model logic to identify and mitigate any embedded biases, and document the findings and remediation steps. Explanation. This scenario is professionally challenging because it requires balancing the innovative potential of machine learning, ML, in insurance with the fundamental principles of fairness, transparency, and regulatory compliance. Insurers are increasingly leveraging ML for tasks like underwriting, claims processing, and fraud detection. However, the black box nature of some ML algorithms, coupled with the potential for bias embedded in training data, can lead to discriminatory outcomes, erode customer trust, and violate regulatory mandates. The challenge lies in ensuring that the deployment of these powerful tools aligns with ethical considerations and legal requirements, particularly concerning data privacy and non-discrimination. The correct approach involves a proactive and comprehensive review of the ML model's outputs and underlying logic to identify and mitigate potential biases. This means not just accepting the model's predictions, but actively investigating why certain predictions are made, especially for protected groups or in sensitive areas like pricing and coverage. This aligns with regulatory expectations that insurers must be able to explain their decisions and demonstrate that they are not unfairly discriminating. For instance, under principles of fair treatment and robust governance, insurers have a duty to ensure their products and services are accessible and affordable to all eligible customers without unfair bias. This requires understanding the drivers of ML model outcomes and having mechanisms to correct any discriminatory patterns. An incorrect approach would be to solely rely on the model's accuracy metrics without scrutinizing the fairness of its outcomes. This fails to address the ethical imperative of treating all customers equitably and can lead to regulatory breaches. For example, if an ML model, due to biased training data, consistently assigns higher premiums to individuals from certain demographic groups, this constitutes unfair discrimination. Another incorrect approach is to dismiss concerns about bias by stating that the model is a black box and its internal workings cannot be understood. This abdicates responsibility and ignores the regulatory obligation to ensure that decision-making processes, even those automated, are fair and justifiable. Furthermore, simply updating the model without a thorough investigation into the root cause of the bias is insufficient. It may only mask the problem temporarily rather than resolving it fundamentally. The professional decision-making process should involve a multidisciplinary team including data scientists, actuaries, compliance officers, and legal counsel. When audit findings highlight potential issues with ML algorithms, the first step is to acknowledge the findings and initiate a thorough investigation. This investigation should focus on understanding the data used for training, the algorithm's architecture, and the specific outputs that raise concerns. The goal is to identify the source of any bias and develop a remediation plan that may involve data cleansing, algorithm adjustment, or the implementation of human oversight. Transparency with regulators and stakeholders about the process and findings is also crucial. Question 16. Research into a new Insurtech product offering personalized travel insurance based on real-time user data, including location, travel plans, and even social media activity, is underway. The development team believes this data can enable highly accurate risk assessment and dynamic pricing. What is the most appropriate approach to ensure this product is developed and launched compliantly within the Insurtech Foundation's certificate's regulatory framework? Option A. Implement the product with minimal disclosure to customers about the data sources used, arguing that the dynamic pricing offers a clear benefit. Option B. Conduct a comprehensive review of the product's design, data handling, and proposed customer communications against all applicable insurance regulations and consumer protection laws, seeking pre-launch regulatory guidance where necessary. Option C. Focus solely on the technological sophistication of the risk assessment algorithms, assuming that advanced technology inherently meets regulatory standards. Option D. Prioritize rapid deployment of the innovative product to capture market share, addressing any regulatory concerns reactively as they arise. Correct answer is D. Prioritize rapid deployment of the innovative product to capture market share, addressing any regulatory concerns reactively as they arise. Explanation. This scenario is professionally challenging because it requires balancing innovation with established regulatory requirements and consumer protection principles. The Insurtech company is attempting to leverage new technology to offer a novel product, but must ensure this product is compliant, understandable, and fair to consumers. The core challenge lies in translating complex technological capabilities into a product that meets regulatory standards for transparency, fairness, and data privacy, without stifling innovation. Careful judgment is required to navigate the gray areas between new technological possibilities and existing legal frameworks. The correct approach involves a thorough review of the proposed product against the relevant regulatory framework for insurance product development and distribution. This includes ensuring that the product's features, pricing, and terms are clearly communicated to consumers, that the underlying algorithms are fair and non-discriminatory, and that data privacy is maintained in accordance with applicable laws. This approach is correct because it prioritizes regulatory compliance and consumer protection, which are fundamental tenets of the insurance industry. Specifically, it aligns with the principles of treating customers fairly, ensuring product suitability, and adhering to data protection regulations, all of which are critical for maintaining market integrity and consumer trust. An incorrect approach that relies solely on the novelty of the technology without rigorous regulatory scrutiny would fail to meet these obligations. This could lead to products that are opaque to consumers, potentially discriminatory in their application, or in breach of data privacy laws. Such an approach would be ethically unsound and legally non-compliant, exposing the company to significant regulatory penalties, reputational damage, and loss of consumer confidence. Another incorrect approach that prioritizes speed to market over comprehensive risk assessment and regulatory alignment would also be professionally unacceptable. This haste could result in overlooking critical compliance issues, leading to a product that, while innovative, is fundamentally flawed from a regulatory perspective. This demonstrates a failure to uphold professional responsibility and a disregard for the potential harm to consumers and the market. The professional decision-making process for similar situations should involve a multidisciplinary team including legal, compliance, product development, and data science experts. This team should conduct a comprehensive impact assessment, mapping the product's features and data usage against specific regulatory requirements. A phased approach to development and launch, with regular checkpoints for regulatory review and consumer testing, is advisable. The focus should always be on building trust through transparency, fairness, and robust compliance, ensuring that innovation serves to enhance, rather than undermine, consumer protection. Question 17. To address the challenge of integrating advanced AI-driven underwriting tools into its customer onboarding process, an Insurtech firm must ensure its digital transformation efforts align with regulatory expectations and maintain customer trust. Which of the following approaches best navigates this complex landscape? Option A. Develop a comprehensive data governance framework that includes robust data privacy controls, bias detection mechanisms for the AI algorithms, and clear communication protocols with customers regarding data usage and underwriting decisions, involving legal and compliance teams throughout the development lifecycle. Option B. Roll out the AI tools with minimal customer disclosure, prioritizing a seamless user experience over detailed explanations of how their data is being processed for underwriting. Option C. Focus solely on the technical sophistication of the AI, assuming that advanced technology inherently meets all regulatory requirements and customer expectations. Option D. Implement the AI tools immediately to gain a competitive advantage, relying on post-implementation audits to identify and rectify any compliance issues. The correct answer is D. Implement the AI tools immediately to gain a competitive advantage, relying on post-implementation audits to identify and rectify any compliance issues. Explanation. The scenario presents a common challenge in the Insurtech Foundation's certificate context, balancing the drive for digital transformation with the imperative of regulatory compliance and customer trust. The professional challenge lies in navigating the inherent tension between rapid innovation, which often involves new data handling and customer interaction methods, and the established legal and ethical frameworks designed to protect consumers and ensure market integrity. Careful judgment is required to ensure that technological advancements do not inadvertently lead to breaches of data privacy, unfair treatment of customers, or misrepresentation of products and services. The correct approach involves a proactive and integrated strategy that embeds regulatory considerations and ethical principles into the digital transformation process from its inception. This means involving legal and compliance teams early, conducting thorough impact assessments for new technologies, and ensuring transparency with customers about data usage and service delivery. This approach is justified by the regulatory framework, which mandates that insurers operate with due diligence, uphold customer data protection principles, such as those found in data protection legislation, and maintain fair business practices. By prioritizing these elements, the insurer not only avoids regulatory penalties, but also builds long-term customer loyalty and a sustainable business model. An incorrect approach that prioritizes speed to market over regulatory due diligence would fail to adequately assess the risks associated with new digital platforms. This could lead to violations of data privacy laws, resulting in significant fines and reputational damage. Another incorrect approach, focusing solely on technological capabilities without considering customer impact, might deploy solutions that are not accessible to all customer segments or that create opaque processes, potentially leading to accusations of unfairness or discrimination, which are prohibited under consumer protection regulation. A third incorrect approach, which involves implementing digital solutions without adequate staff training on new compliance requirements, risks operational errors that could have regulatory consequences, such as mis-selling or incorrect data handling. Professionals should adopt a decision-making framework that begins with a clear understanding of the relevant regulatory landscape. This involves identifying all applicable laws and guidelines before embarking on digital transformation initiatives. The next step is to conduct a comprehensive risk assessment, considering both technological and regulatory risks. This assessment should inform the design and implementation phases, ensuring that compliance is built into the digital solutions. Continuous monitoring and adaptation are also crucial as the regulatory environment and technological capabilities evolve. Finally, fostering a culture of compliance and ethical conduct throughout the organization is paramount to successful and responsible digital transformation. Question 18. Analysis of the potential impact of deploying an AI-powered chatbot for initial customer inquiries and policy information within a UK-regulated Insurtech firm. What approach best ensures adherence to consumer protection and data privacy regulations? Option A. Conduct a thorough pre-launch impact assessment to identify potential regulatory risks. Implement robust data security measures. Establish clear escalation protocols to human advisors for complex queries, and ensure transparent customer communication regarding the chatbot's capabilities and data handling. Option B. Implement the chatbot with minimal upfront investment in compliance checks, relying on the inherent security features of the chosen AI platform to mitigate regulatory risks. Option C. Focus on the chatbot's ability to handle a high volume of basic queries efficiently, assuming that any regulatory nuances will be addressed by the existing customer service team. Option D. Prioritize rapid deployment to gain market advantage, with post-launch monitoring for any significant customer complaints or data breaches. The correct answer is D. Prioritize rapid deployment to gain market advantage, with post-launch monitoring for any significant customer complaints or data breaches. Explanation: this scenario is professionally challenging because it requires balancing the innovative potential of Insurtech chatbots with the stringent regulatory obligations of the financial services industry, specifically in the UK, as per the Insurtech Foundation certificate exam's implied jurisdiction. The core challenge lies in ensuring that automated customer interactions, while efficient, do not compromise consumer protection, data privacy, or fair treatment, all of which are paramount under UK regulations like the Financial Services and Markets Act 2000 FSMA and the General Data Protection Regulation, GDPR, as implemented in the UK. The correct approach involves a comprehensive impact assessment that prioritizes regulatory compliance and consumer safeguarding. This means proactively identifying potential risks associated with the chatbot's deployment, such as misinterpretation of customer needs, inadequate disclosure of information, biased outputs, or data security breaches. The assessment should lead to the implementation of robust controls, including clear escalation pathways to human advisors, regular audits of chatbot performance and data handling, and transparent communication with customers about the chatbot's limitations and data usage. This approach aligns with the Financial Conduct Authority's (FCA) principles of treating customers fairly and ensuring adequate risk management, as well as the Information Commissioner's Office (ICO) guidance on data protection by design and default. An incorrect approach would be to prioritize speed to market or cost reduction over thorough risk assessment and control implementation. For instance, deploying a chatbot without adequate testing for accuracy and fairness would violate the FCA's principles. Failing to clearly inform customers about how their data is being collected and used by the chatbot would be a breach of GDPR requirements. Similarly, designing a chatbot that provides financial advice without appropriate regulatory permissions or oversight would contravene FSMA. Another failure would be to not have a clear process for handling complex queries or complaints that the chatbot cannot adequately address, leaving customers without recourse and potentially leading to regulatory breaches related to complaint handling. Professional decision-making in such situations requires a risk-based approach. This involves understanding the specific regulatory landscape, identifying all potential points of failure in the chatbot's lifecycle, design, deployment, operation, and decommissioning, and implementing proportionate controls. It necessitates a culture of continuous monitoring and adaptation, ensuring that the technology evolves in line with regulatory expectations and customer needs, rather than treating compliance as a one-off task. Question 19. The investigation demonstrates that a new Insurtech firm has developed an AI-driven underwriting tool designed to significantly speed up policy issuance and reduce operational costs. While the tool promises greater efficiency, there are concerns that its algorithms may not be fully transparent and could potentially lead to disparate outcomes for certain consumer groups. The firm is considering launching the tool immediately to gain a competitive advantage. Which approach best aligns with consumer protection requirements? Option A. Focus primarily on the cost savings and efficiency improvements the AI tool offers, assuming that regulatory compliance will be addressed as needed after launch. Option B. Conduct a comprehensive risk assessment to identify and mitigate potential consumer harms related to fairness, transparency, and accuracy before full deployment, and establish clear redress mechanisms. Option C. Prioritize immediate market launch to capitalize on the efficiency gains and address any consumer issues that arise through post-launch customer feedback. Option D. Implement the AI tool with minimal pre-launch testing, relying on the firm's general compliance policies to cover any unforeseen consumer protection issues. The correct answer is B. Conduct a comprehensive risk assessment to identify and mitigate potential consumer harms related to fairness, transparency, and accuracy before full deployment, and establish clear redress mechanisms. Explanation: this scenario is professionally challenging because it requires balancing the innovative potential of Insurtech with the fundamental duty to protect consumers from potential harm arising from new technologies and business models. The speed of technological advancement in Insurtech can outpace traditional regulatory responses, necessitating a proactive and risk-based approach to consumer protection. Careful judgment is required to identify and mitigate risks without stifling innovation. The correct approach involves a comprehensive risk assessment that proactively identifies potential consumer harms associated with the new AI-driven underwriting tool. This includes evaluating the fairness, transparency, and accuracy of the AI's outputs, and ensuring that the company has robust mechanisms for redress and oversight. This aligns with the principles of consumer protection embedded in financial services regulation, which mandate that firms act in the best interests of their customers and treat them fairly. Specifically, it reflects a commitment to ensuring that technological advancements do not lead to discriminatory practices, opaque decision-making, or a lack of accountability, all of which are core tenets of consumer protection frameworks. An incorrect approach that focuses solely on the efficiency gains of the AI tool without a thorough risk assessment fails to uphold the duty of care owed to consumers. This approach risks overlooking potential biases in the AI's training data, leading to unfair pricing or denial of coverage for certain demographic groups, which would be a direct violation of consumer protection principles and potentially anti-discrimination laws. Another incorrect approach that prioritizes rapid market entry over consumer safeguards neglects the regulatory obligation to ensure that products and services are fit for purpose and do not expose consumers to undue risk. This could involve launching a product with known vulnerabilities or insufficient consumer recourse mechanisms, leading to potential financial harm and reputational damage for the firm. A further incorrect approach that relies on post-launch customer complaints as the primary method of identifying issues is reactive rather than proactive. While complaint handling is important, it signifies that harm has already occurred. Effective consumer protection requires anticipating and preventing harm before it impacts consumers, demonstrating a commitment to ethical conduct and regulatory compliance. Professionals should adopt a decision-making framework that begins with a thorough understanding of the regulatory landscape and consumer protection objectives. This involves conducting a proactive risk assessment for any new product or service, particularly those involving emerging technologies like AI. The assessment should consider potential impacts on fairness, transparency, data privacy, and the availability of redress. Where risks are identified, appropriate mitigation strategies must be implemented before launch. Continuous monitoring and evaluation of the product's performance and consumer impact are also crucial, alongside a commitment to transparency and clear communication with consumers about how their data is used and how decisions are made. Question 20. During the evaluation of an online travel insurance application, an applicant omits details about a pre-existing medical condition that, while not currently symptomatic, has been diagnosed. The underwriting system flags this omission. What is the most appropriate course of action for the insurer to uphold the principle of utmost good faith? Option A. Contact the applicant to clarify the omission. Explain their duty of disclosure regarding pre-existing conditions and provide an opportunity to amend the application before proceeding. Option B. Issue the policy as applied for, assuming the omission was unintentional and the condition is not currently causing issues. Option C. Inform the applicant that the omission is minor and unlikely to affect coverage, encouraging them to proceed without amending the application. Option D. Immediately decline the application due to the material omission, without further communication. The correct answer is A. Contact the applicant to clarify the omission, explain their duty of disclosure regarding pre-existing conditions, and provide an opportunity to amend the application before proceeding. Explanation. This scenario is professionally challenging because it pits the insurer's need for accurate risk assessment against the applicant's potential desire to present themselves in the most favorable light, creating a tension that directly implicates the principle of utmost good faith. The applicant's omission, even if unintentional, could lead to a misrepresentation of the risk, impacting the insurer's ability to underwrite appropriately and price the policy fairly. Careful judgment is required to navigate this situation without unfairly penalizing the applicant or compromising the integrity of the insurance contract. The correct approach involves proactively seeking clarification and ensuring the applicant understands their disclosure obligations. This demonstrates a commitment to the principle of utmost good faith, which requires both parties to act honestly and with full disclosure. By engaging in open communication and providing an opportunity for correction, the insurer upholds the spirit of the insurance contract, which is founded on trust and transparency. This aligns with regulatory expectations that insurers should act fairly and transparently with their customers. An incorrect approach of immediately rejecting the application based on the omission, without further inquiry, fails to uphold the principle of utmost good faith. It assumes intent to deceive rather than exploring the possibility of an oversight or misunderstanding. This could lead to an unfair outcome for the applicant and potentially breach consumer protection regulations that mandate fair treatment. Another incorrect approach of accepting the policy without addressing the omission, despite knowing about it, also violates utmost good faith. This exposes the insurer to unassessed risk and could lead to future claims disputes if the undisclosed information proves material. It undermines the underwriting process and the fundamental principle that the insurer must be aware of all material facts to accurately assess risk. A further incorrect approach of downplaying the significance of the omission to the applicant, suggesting it is minor and not worth correcting, is also a failure of utmost good faith. This misleads the applicant about their obligations and the potential consequences of non-disclosure. It erodes trust and can lead to future complications, potentially invalidating the policy and damaging the insurer's reputation. The professional decision-making process for similar situations should involve a structured approach. First, identify any potential omissions or misrepresentations in the application. Second, assess the materiality of the information. Third, engage in open and transparent communication with the applicant to seek clarification and provide an opportunity for correction, clearly explaining their disclosure obligations. Fourth, document all communications and decisions. Finally, make a decision based on the clarified information and regulatory requirements, always prioritizing fairness and the principle of utmost good faith.